Good morning to all. I am Dr. Drsnsrcas, Department of Commerce with Computer Applications, Dr. Drsnsrcas College of Arts and Science. Today, we see methods of single entry system in single entry system. First of all, net worth method. The following 5 steps are to be followed for ascertaining profit or loss under net worth method. Step 1. Calculating opening capital. Opening capital can be found by preparing a statement of affairs at the beginning of the year. A statement of affair is just like a balance sheet. Assets are shown on the right hand side and liabilities are shown on the left hand side of the statement of affairs. The difference between both the sides represents opening capital. Since full record are not maintained by the business, the assets and liabilities are ascertained as follows. Cash can be physically counted, bank balance is obtained from the passbook, stock is recorded through physical stock taking, debtors and creditors are usually from the list maintained by the business, other assets can be listed out after an approximate valuation by the owners, any other relevant data like outstanding expenses, accrued income should be listed out from the owner's memory. Ascertainment of drawings during the year. This is a difficult task in most of the cases because cash book may show a part of the withdrawals only. Money may be used for personal purpose out of sale, proceeds, and the balance only may be recorded in cash book or deposited in the bank. Still, the owner's personal estimate may help in arriving at the rough amount of the drawings. Step 3. Ascertaining capital introduced during the year. Additional capital provided by the owner during there may be in cash or in the form of assets or goods. The total amount must be recorded in whatever form it was brought in. The fourth step is computing closing capital. Closing capital can be found by preparing a statement of affairs at the end of the year in the same way as opening statement was prepared. However, all adjustment relating to depreciation, provisions for doubtful debts, etc. must be made in the closing statement of affairs which were not necessary in the opening statement. Distinction between balance sheet and statement of affairs. Basis of preparation. Balance sheet is based on leader balance, but statement of affairs is prepared from balance. Valuation, information from equity, etc. Second one is system. Balance sheet is prepared on the basis of double entry system, but statement of affair is out of incomplete records. Third one, trial balance. Trial balance is prepared before a balance sheet is drawn, which ensures its arithmetic accuracy. Statement of affairs has no foundation like trial balance. Fourth one is omission of assets and liabilities. Omission of any assets or liabilities is automatically found in balance sheet because the debit and creditors will know tally, objectives and purpose. Balance sheet reveals the financial position of a business accurately. Capital is shown in the balance sheet from the capital account in the ledger. Next, conversion method meaning. The process of collecting, computing and recording missing information along with the available data in the incomplete books of a business is called conversion method. Once the books are converted, all future transactions can be recorded as per double entry system. Need for conversion. The net worth method does not provide a clear picture of the operating result of a business. It does not show sales, purchase, gross profit, operating expenses, etc. So it is not possible to make a meaningful analysis of the financial statement and initiate effective steps to improve the financial position of the business. The following are the steps to be followed for conversion of incomplete record as per the requirements of double entry system. Step 1. Statement of affairs at the beginning of the year from which conversion is to be affected should be prepared. The balance in the statement represents opening capital. In problems, it may not be possible to complete the statements due to missing opening balance like debtors, creditors, stock. The statement should be prepared to the extent possible and can be completed at a later stage. Step 2. Cash book with cash and bank columns or a single column should be prepared. Careful scrutiny of bank passbook and enquiry relating to cash takings used by the owner for personal expenses and payments are essential. In problems, opening or closing cash or bank balance may be missing. The balance in the cash book represents the missing figures. Cash book must be prepared even when the opening and closing balance of cash and bank are given. Any shortage on the debit side can be cash sales or additional capital introduced or sundry income. Shortage on the credit side can be cash purchases of drawings or sundry expenses. Thank you.